My first question to Ravindra. Ravindra, I request you probably you can throw some light on the business structure, what ideally people should have when they really wanted to scale up.
So good evening, Aptab. So it is very difficult to manage the session before dinner time. So I'll take very few minutes of your time. So if you start any business, you can start from your home, but to get some identity, some trustworthiness in market, it's better always better to go with some compliance firm like a private limited company or any LLP with limited compliances. But if you are very initial stage, you can start with a proprietary firm or a HUF or a small partnership firm. When your business is getting growing and getting recognition from the market and you need some funds and you want to expand your business, then you can move from proprietorship or partnership to a private limited company or a limited company, then to public IPO, that stock listed company.
Ravinder, how complex is starting a business compared to maintaining it? In fact, we are all don't maintain the company. We just started. So, what are the basic things they need to follow to maintain the company?
So to maintain the company, depending upon the nature of the company, if it is a private limited company, every year you need to file income tax returns with the income tax department. If you have losses to carry forward, you must file your income tax return. And if you have business or not, you mandatorily file returns with the ROC. Like two forms will have AOC 4 and MGT 7A. The legal fees will be, if you file on time, the legal cost will be around 300 to 400. But if you file to miss on time, the late fees will be 100 for form per day. Assuming you missed it for 1 year, due to some issues you could not file for 1 year, you need to pay extra cost of around 75,000. So to maintain a company it is very difficult. So for we always suggest our clients, if your business has not peaked and you're in the starting stage, we'll only ask them to start either partnership firm or LLP. To maintain the business, very because private limited is very difficult. The compliance cost is very high because you need to find a chartered accountant. For partnership firm, it is not required. You need to appoint him. You need to pay him the audit fees, and every year the account has to be audited. He will charge fees and file the ROS returns, the late fees, compliances. So it's very difficult, but it will cost you around 40 to 50,000 per a company per year. The incorporation cost will be 20 to 30,000, but to maintain it, you have to keep aside around 40 to 50,000. If you have taken GST also, you have to file again monthly returns. So additional cost. If you have employees and everything, PF, ESI returns you have to do. So before entering into any act, before taking any registration, you should make sure that you have to comply with.
Ravinder, you transferred many private limited company into the dematerialized form. Could you please throw some light on, is there any limit for the private limited company to have their shares into the demat form?
Yes. You all know when you are opening a private limited company, will be subscribers and you'll have 5,000 shares, 2,000 shares, 1,000 shares, because you'll have all have in physical forms. But now what SEBI is saying, as compliance are increasing and general public are putting their money into companies, let it dematerialize. So you can have your shares not in physical form. If you have any Zerodha account, you should have your shares in that account. So now initially they have not asked all the companies to do it. They first initiated with public limited companies. Now all public limited companies should mandatorily keep their shares in demat form only. If any transfer is happening, it should be between only demat accounts. And for private limited companies, they exempted small companies now. Other than small companies, all are required to maintain their shares in demat form only. Now, what is small company? A small company is one which does not have paid up capital more than 4 crores and has not crossed a turnover of 40 crores. So if you are below in that line, you are still have the flexibility of having your share in physical form. Otherwise, you have mandatorily maintain your shares into demat form only. If any transfer is happening, it should be between two demats only, no physical transfer now onwards.